Company is almost 30 years old now, so uh, their business line is mainly into manufacturing of camper and allied products in southern part of Tamil Nadu. Is a small city or town called Kanchipuram. So their plant is based out there. So now we are going to see about the fundamentals of the company, whether the valuations are justifiable and are there any business opportunities. The screen which I am using is a website called Screener. I found it useful because at one go we get all the details on the fundamentals. So that's the reason I have used this site. So now to quickly go into the overview. Uh, this is the snapshot of the company. The market value of the company is around well above 100 crores. I would say not a penny stock, but very closer to that. 147 crore is the market value of the company. The current price is around 337. So they made a high of 447 and a low of 125 in this year alone. The company is trading around 5 times two's earnings. Um, and the dividend yield is around less than a percent, so which is not significant actually. So since it is the company is into a penny zone, they are not paying at a very high dividend. Maybe they are retaining the cashes for a future growth or future investment perspective. Maybe that may be one of the reason. So the return on equity is pretty significant, and the return on capital employed is also significant. We will see the reason why it is that high. Even the sales growth numbers you can see at an annual terms on 3 years basis, it's almost close to 50%. It's pretty significant. Only thing is we need to see whether it is sustainable in the long term. So that is one risk factor here. So now quickly to go into a 1 year chart. We are around 150 and then we made an high of around 447 and now currently around 370 levels. Now when I look into the all-time chart from 1990s to till now, so till 2017 the company's share price is around 20 to 40 levels, not significant. Even at around 10 to 40 levels they were spending time in that zone. The reason is uh, their business is a little bit stagnant because the camper business, the growth opportunity seems to be not that significant. Even the order base or the sales book, um, those things, those factors kept the prices muted for very long time, around 20-25 years. They were around 10 to 40 levels. After 2017, the company share price shooted from 40 to around 600 levels very significantly, almost 10 times returns in 2 year terms. That means 1 lakh will become 10 lakh in 2 years. It's like a magic. uh, Maybe the people who have held it for a significant term might have reaped those benefits in 2 years. That is one reason, because it's this are all more or less like a penny stocks. Many people are unaware, but only good thing about this sort of companies is the management is more or less like a trustworthy now. Almost 30 years now, they're running the business, a virtually debt-free company, and no frauds or no litigation. So those sort of companies, that looks attractive. That one factor looks attractive. Even in this website, you can see there are a lot of pros. They have reduced debt, virtually debt free. The reason they are became debt free is these are not very high capital intensive business. uh, so that's just one of the reason. That is one of the reason they don't need money, borrow money to run the business. That is one of the reasons. And other factors, the sales growth and return and the EPS, the share price jump, all those things we'll see. Before going to that, let's do the pair comparison. So almost 8 firms now, but I don't know why they have compared it with Pidilite. Maybe because of the chemicals they have listed down here. Maybe that's a wrong comparison. So the ideal thing is we should take 6, 7, 8. That is nothing but Vinith Organics, Navin Flu, and Kanchi Karpuram. So we can take them as a comparison. But even if we see, they're nowhere near to this business, because uh, I would say literally say there are no competitors, because um, this company is almost at penny stock zone. So we can see where is 100 crores and where is 9,000 crores. So that is one thing. It should be an apple to apple comparison, I would say. Uh, that's the thing. So as of now, they are making a profit of 2 crores in a quarter wise, and others are nowhere at double digit zone. So that is one of the reasons. So let's look at a standalone basis whether they are attractive or there any opportunities. Now quickly going into the income statement from 2010 to 2019, you can see in March 2019 the sales was around 29 crores and expense were 26 crores. They are making an operating profit of 4 crores and a net profit of a crore, 1 crore rupees, 1 crore rupees in 2010. So in 2010 they are making a profit of 1 crore and sales of 29 crores, and their share price was around 10 to 20 or 40, whichever it is. Now when we look at 2019, the sales is almost around 8 to 7 to 8 fold, around 190 crores, and their profit is around 28 crores. It's almost 28 times. So 2010 their profit was around 1 crore, and where they were trading at 40 or 20, now they're around 28 times. So that literally means uh, the prices are that's the reason you can see here, that is one of the justification. So due to the new order which came into their books, those increase the profit almost tenfold actually. That's the reason the share which was trading at 40 raised to 400, almost a tenfold. So that is quite justifiable, but only thing is whether this sales or order book uh, is a one time activity. That is one thing which we need to see before buying to any sort of this stocks, because it should not be a one-time activity. The contract should not be for a 1 or 3 year period. If it is for a short term, they are because this sales numbers will come down. So literally the profit numbers will come down, and and the price also will come down. So I don't think so there is any speculations here. So I would say that is clean. So the price movement is justified by the fundamentals. That is one good thing. And also the one research which needs to be done is whether the sales are justifiable over long term. That is one thing, whether the orders are justifiable and the contracts are justifiable, because usually these companies might get contract for 3 or 4 years or 5 years period, whichever it is. So we should see what is the concentration of the business to, whether if they have the contract being tied up to only one person, then it is huge risk. If it is segregated, then it is okay. That is one point which needs to be noted. And sales growth, I had told earlier, it seems like they have backed a new contract at the end of 2017. That literally pushed them to their profit to an higher numbers. That is one of the thing. It looks good. And you can see the borrowing significantly. They didn't borrow any debt. The reason is it's not a very high capital intensive. They are not the promoters were able to commit their own funds for their business. That is one thing, interesting thing. The interest factor is not there. uh, the profits are not eaten by any interest component. That is makes the business looks attractive. But there are other liabilities too, we can see here. They have around 16 crores of other liabilities, maybe the account payables which they need to pay to the raw material suppliers or other things. And they have the other assets. You can see they have to receive 14 crore of trade receivables, and they have a cash equivalent of 2 crores. So I think with 2 crores they can meet the account the account payable of 16 crores. That is fine, but they need to get back that 14 crores very fast. So we should see how soon they are collecting those 14 crores from the debtors. I mean to say the amount which we need to receive, so that they need to pay. So they have a liability to pay of 16 crores. They need to receive 14 crores. So there should be a match. So they will receive here and they will pay there. So they will pay for their supplies. That is one thing which you need to see. So the debtor days, going back to the debtor days, it looks interesting. It looks consistent too. They are collecting their receivables in less than 30-day time period. So it looks interesting. It's not a high turnaround days. So they can meet their obligations in a timely manner. So the cash flow from operating looks interesting, but there is a one-time spike due to the one-time order activity. That is the reason, but it looks interesting. Investing, it looks like companies investing little bit uh, from their current operations. But one thing which we need to see is these are since these companies or market values are less, so their business capacities or plant based will be on the lower side. So only concern is whether they can increase the business. Even if they increase the business, whether they have the plant capacity. Even if the plant capacity is there, are they going to stick only to this sort of segments, or they're going to diversify into new segments? That is one thing, the willingness of the management. So those things which you need to see it from the management discussions and analysis in the annual reports. So what they are actually talking about, whether there is any sort of expansion in the plant base, because this business are not a very highly competitive business, but also the volumes are very seasonal, uh, and I would say it's very stable. So that is one thing which we need to see, because um, the camper is something which is mainly used as a traditional and only Hindus or Hindu festivals, I would say. So campers are maybe in few other religions too, but what is the consumption? That is one thing which you need to see, whether they are selling those chemicals for other companies as a pre-raw materials. That things we need to see, because unless and until they are going to increase the plant size, uh, so the new orders doesn't make it very attractive. But at the same time, uh, considering this as a value stock, the management which is there for 30 years and they are not into any litigations or virtually debt free, they are committed, so that is a huge positive sign. So I would say that's a comfort factor, not a positive sign, but that's a comfort factor. Let's look at the shareholding pattern. The shareholder pattern looks a little bit tricky, because it's segregated all around the place. But one interesting thing is the promoter holding is not significant, because it's less than 51%. That is one thing which is worrying, because if the company is going to do well, why the promoters are not having the major shareholder pattern? That is one which worries me, because still the company is in hands of public. Even though the shareholdings, the promoter holdings are increased over time, maybe one reason is the share price have been increased now. uh, that might be one of the reason. Even if they want to increase their holdings, they don't want to do it at current point. That might be one of the reason. And also at the same time, the price of the stock itself, considering only the price factor, that is itself a disadvantage, because in Indian markets the prices reflect the costly or cheap thing. Because the stock which is trading at 337, you get a State Bank of India for 200 rupees and Kanchi Karpuram for 337. So in price terms, psychologically people think, why should I buy this? But in value terms, they look attractive. But either the management should consider in doing the splits over long term. They have to do a 10 is to 1 is to 10 stock split, so that the stock price will be around 30. So the people will not think because in Indian stock market it's almost all about speculating. It's all about trading, right? So the one reason I would see is, even if the stock rallies around 600 or 700, it won't be sustainable, because the price is huge, right? So it won't be sustainable for a long time. That is one worrying thing. And also at the same time, now the current price is now coming to the final answer, whether we can buy, or is there any opportunity. Now the price is around 337, right? So now most of the increase in jumps came from the last 2 years of increase in sales. Only thing which we need to see is whether the sales will be justifiable. It's not tied to one-time activity. Now taking at the average of last 10 year sales, it is somewhere around, I would say, 100 crore. So even if it is an 100 crore, even if I put from 2019 levels, the sales are around 30. It can be a 4 or 5 times from that. So that will be somewhere around 200 or 180 levels. So I would say buying this around 180 or 180, 150 to 180 or 200 levels, keep oneself safe, because we are not indulged in that one time spike, so will it will be a comfortable thing. Giving to other factors, the debt free thing, and good management history and the business level, uh, I would say it's not a very high profit margin, but at the same time, uh, uh, the competition is not vulture. The vulture competition won't be there, because they have established for a long time and they have committed. So I would say anything around 180 to 200 we can consider for a long time. I would say it's all about one risk appetite. So other factors, as I told, we should see what exactly the management is willing to do for the next 3-4 years time. So whether they're going to increase the plant capacity. Giving all these factors, one can have a look based on the risk appetite. They can analyze and they can make a decision on the same. Thank you. Thanks all. Meet you in the next stock. Thank you.